Okay, let's get started. It is 4, so we're right on time. Hello, everyone, and welcome. Thank you for joining us today. My name is Mariana. I'm the marketing manager for the MiCA Crypto Alliance. We're very pleased to host this session today in collaboration with Atoma Studio and to have participants joining from across Europe. Before we begin, here is a short overview of our agenda today. So first, we'll start with a presentation from Automa Studio, where they'll cover Article 92, market abuse and trade surveillance. Then we'll give a short overview of how the Alliance supports CASPs with MiCA documentation and ESG disclosures. And finally, we'll close with a Q&A and a few final remarks. So I'll let the speakers introduce themselves. Thank you again for being here. And with that, I'll hand it over to Oliver to begin.
Thank you for your warm introduction, Mariana, and thank you for having us here at this webinar today. My name is Oliver, and I'm a business developer at Atoma Studio. Automa Studio is a crypto-first intuitive trade surveillance tool designed to meet Article 92 in the new EU regulation MiCA. Atoma launched earlier this year and was built to detect and act on specifically market abuse. I'm sure a lot of you have heard about these examples, but let me just briefly explain some of them. So first, wash trading is when a trader makes repeated self-trades or wash trades from the same account on opposite sides, creating artificial volume and giving a false impression of liquidity or market interest. And then we have spoofing. That's when a user are placing oversized order above the top of the book and then canceling immediately to profit from that reaction. And then we have pump and dump, another classic form of manipulation, inflating an asset's price through hype or coordinated buying and then selling quickly at the top. We also have misleading information, which involves spreading false or exaggerated claims to move prices and also benefit from the reaction. And finally, layering and front running, and these involve placing multiple non-genuine orders at different price levels to distort the order book or using privileged information to trade ahead of clients. And these are all well-known examples of market abuse, which may happen to a broker or exchange. And under MiCA Article 92, CASPs must have an infrastructure that detects and flags potential insider trading and market manipulation. You need to be able to show regulators that you monitor trades in real time, that you flag suspicious behavior, and have audit trails and escalation workflows to your FSA and compliance team. Without a system that's fit for purpose, this becomes a pain to maintain, and frankly, most CAPs don't have the tooling to do this properly. So when it comes to trade surveillance under MiCA, the ones just mentioned are key behaviors, but this is also risk-based. CASPs are often left without a realistic option, or they end up solving it on the back end with fragile in-house setups. But larger CAPs need a more robust solution. Regardless of size, the expectation is clear. Surveillance must be documented, auditable, and capable of producing alerts that can be escalated to your national FSAs. We built Atoma because existing solutions were too complex and expensive. Atoma delivers a plug-and-play MiCA Alliance system for effective oversight. It's a crypto-first intuitive dashboard that lets your compliance teams act quickly instead of drowning in false positives. It's a system already proven to satisfy MiCA surveillance requirements in practice, as Atoma's first customer, Safello Exchange, received the MiCA license about a month ago. But let me now hand it over to our product manager, Mikael, for a bit more details of the tool and also a case study.
Thank you, Oliver. So first of all, thank you for the opportunity to talk to you, and a pleasure to see so many attending this webinar. For trade surveillance, we've built Atoma to help CASPs comply with MiCA regulation, as Oliver explained. We built it so it's purpose-built. We don't want to create additional complexity. We just want to focus on making sure that CASPs such as Safello are compliant with the requirements, because they are coming new in MiCA. So we built a system that, imagine Safello on the top of this page is as a crypto asset service provider under MiCA, that sends transaction data to Atoma. In Atoma, we have policies and controls of the specific entity, such as Safello. We build a rule engine to monitor for these scenarios that Oliver is speaking about. And most importantly, we store and we log it. And this is important from an audit perspective and something that regulators always ask about. To make it user-friendly, we try to integrate it with the processes, as we will look at later. That's a key thing in any type of regulatory setup where you need to monitor something. It needs to be aligned and embedded with the actual processes that compliance use. We also have a case processor and a sort of specific audit functionality within it. So in a sense, we build it so that we can fully cover the regulatory requirements. And these are just functional boxes, so it might not say that much to you. But if we move to the next page, we'll talk more about the governance behind it. So as you might know, if you're in the sort of MiCA compliance, trying to get the MiCA license, you know that compliance needs to be set up specifically for many regulations, but also for market abuse. When it comes to trade surveillance, this is our best practice view of how you can set it up in a sort of rocky process way, where you have different accountabilities, responsibilities across the entirety of the CASP. So importantly for us is to say a system is only one piece of the solution. You also need to build up your governance around it. And we believe that with our solution that we've launched for Safello, which is compliant now with regulators, it embeds these activity steps already in the software. But it also requires additional documentation on the side and thinking about how, who are your customers, how do they behave, what are the internal roles that we need to have to make this fly, how does compliance work under MiCA, which is all valid points and things that you need to consider when you apply for the MiCA license. So even though it might sound a bit boring sometimes, but having the processes and routines, but also the training, because this is new, is very important. Also to have clear responsibilities in between the different parts of the organization is very, very important. So how does this look like when it comes to actually working with this? In Atoma and for Safello, which is the use case that we're presenting today, we have, as you saw before, the modules, but they are represented in a way of a dashboard. So in the dashboard, Safello can easily monitor the number of cases that are being checked in different time periods, days, weeks, months, even years. And we can see what type of activities are being flagged as suspicious. We don't know for sure because we can only mark, and that's important. We need to be able to see which transactions could be market abuse, but we cannot decide that it is, because that's the regulator's job in the end. And we also have other views. So we have a nice cases view, which is another part of the process. And rules, I think, is the next one here. So rules is an important concept when it comes to market abuse, because this is where we set up how we want to check all the transactions that a CASP make. It can be a crypto exchange. If you have a specific type of customer, let's say you have a lot of retail customers, then you might need to set up the rules in a certain way to catch the scenarios that are most appropriate for you. Because as Oliver mentioned in the beginning, it's a risk-based approach. So we need to do some thinking about what are the risks that we really want to look for, and set up the system in such a way to reflect that. Once we've set up the rules, which also has a bit of statistics there, we look at the cases. So the cases is when you have a transaction that fills the criteria of the rules. So if you just go to the next slide, then the cases show up in a way where the compliance person, or the person that is assigned to look for these market abuse scenarios, can easily see the full information, but also then judge in a database, because Atoma Studio also has a database, whether it's a false positive or it's a real positive, and we need to act on it and then send it into the regulator. So with these processes and steps and these screens that we showed you, we have made and helped Safello to become compliant with MiCA, specifically Article 92, which is around market abuse. We believe that compliance for Article 92 doesn't need to be that complicated. We believe we have a system and a process to help other CASPs be compliant. And what's nice with this is, now that we have the sort of one FSA in Safello in Sweden that has seen the documentation and agreed to it, we sort of have a best practice that we can roll out, that we believe is really fit for purpose when it comes to medium and small type of entities in Europe. And we know that a lot of entities are struggling with this as well, trying to figure out what exactly are the rules. So that's something that we, together with also MiCA Crypto Alliance, can surely help you with. And I'll stop you there for our presentation. But you're welcome to ask us questions later in the Q&A, but also send questions to hello@atomastudio.com.
Right. Thank you, Mick. Mariana, can you switch to the next slide, please? Hi, everyone. So I'm Aayush Ladda. I'm a senior business analyst at Exponential Science. Thank you so much for joining us for the webinar today. Up to now, we have talked about market integrity and how surveillance works with Safello. Now I want to shift to the second pillar of MiCA compliance, that is documentation and sustainability disclosures. This is where the MiCA Crypto Alliance comes in. The Alliance supports CASPs and token issuers with the most difficult regulatory deliverables under MiCA, which is a MiCA-compliant white paper and ESG disclosure obligations. So the MiCA Crypto Alliance, we are an industry-led initiative, which is supported by our parent company, Exponential Science. We bring together exchanges, regulators, law firms, technical partners, and we work together in raising the standards for MiCA disclosures across Europe. So here are some of our alliance members, which we have been actively working with. Our goal at the alliance is simple: to make MiCA compliance practical for everyone. So we aim to equip issuers and crypto asset service providers with MiCA compliant white papers, ESG data, and offer end-to-end support in the documentation required for the MiCA compliance. So let me break down this into two tracks you see here. One is MiCA white papers, and the second one is ESG disclosures. On MiCA white papers, we support drafting, reviewing, and updating the documentation in the which is in line with the implementing regulations of MiCA. So we also handle issuer liability with Article 15, XBRL and IXBRL rendering, which is going to be mandatory starting from the 20th of December this year. And on ESG side of things, we provide both the data in the correct required formats and in compliance with Article 66. And we push it to not just include mandatory indicators, but we also provide with all the supplementary and optional indicators and offer continuous support with the data updation required for the disclosures. So for a CASP or a issuer, that means one partner for both sides of things, documentation requirements on legal side as well as sustainability side. This slide reinforces why MiCA documentation is not optional and not something that we can patch in later. So every token under the MiCA regulation, may it be asset reference token, e-money token, or the other categories of token, they require a standard format of white paper, which includes sections like risk, governance, rights and obligations, technology description, and sustainability indicators. In parallel, CASPs must also assess issuer compliance before admitting a token to trading. So even if you are not issuing a token, a CASP is still responsible for validating disclosure before listing a token on the platform. And sustainability is now embedded in the MiCA white paper. So it is not a nice to have solution. It is a mandatory section. So without ESG disclosure, a white paper is not complete and an exchange cannot safely list an asset. And the slide, you can also see that it covers quite a lot of other requirements as well. Talking of what are the pain points that the industry face right now, one is high legal costs. So legal teams, they can produce white papers, but that comes up with a high cost and takes a lot of time. And most of the legal teams, they don't have proper access to and to the calculations of ESG data. So they pay for a third party for sustainability data sets. And MiCA and RTS, they evolve very quickly. So a white paper which is compliant right now may not be compliant 6 months moving ahead. And obviously that comes with a quality risk as well, where maintaining the quality of white papers is very, very important for us. So this creates like a cycle of high cost, slow updates, compliance and uncertainties, and that is exactly what the Alliance is aiming to solve. With the Alliance, we have a proven track record. We've until now supported more than 50 plus ESG disclosures and MiCA white papers. We now cover more than 1,200 assets in our ESG data. This includes all the mandatory, supplementary, and optional indicators. And most of our services are in a 24-hour turnaround time and is completely achievable. So the point here is experience and specialization that we bring onto the table. Before I wrap up, I want to highlight other things that we work on beyond helping CASP and issuers as well. So a major focus area that the Alliance is working on is towards thought leadership and regulatory collaboration. We just don't follow MiCA, we actively contribute on shaping how the implementation works across Europe. For example, we have provided formal input to ESMA on the MiCA XBRL implementation, helping ensure that the regulatory taxonomy And the reporting framework reflects the technical and business realities of the industry. Right now, we are also working on leading a standardization initiative for liquid staking tokens, which is academia-backed and industry-led initiative. So we are in the final stages of concluding the research at Exponential Science, and we would like to extend an invitation to join the working group until the end of this week. So this is a good opportunity for the CASPs and service providers to contribute your expertise, provide valuable inputs, and basically help the regulatory framework and the future of liquid staking tokens. So the idea here is simple. Standardization will reduce friction and will increase trust. So for issuers and CASPs, exchanges, regulators, all of them. So when disclosures, they look same and the taxonomy is aligned, the entire system would move faster and more safely. And we publicly share this knowledge on the MiCA Crypto Alliance website, and you can find it all these reports and findings on our website. So if you're a CASP, a token issuer, or an exchange, or simply someone who's looking for MiCA related issues or navigating any problems, feel free to get in touch, visit our website, access our reports, reach out to us at the given contact details, and we would be very happy to collaborate. So thank you so much, everyone, for being here. I think now we can move ahead to the Q&A session. Feel free to drop any questions that you have in the chat. I already see that we have a few questions in the Q&A section.
Yeah, let's maybe pick a question. I think this was meant for the Atoma team. Can you give some examples of the rules which you can set up? Can this tool be integrated with other compliance-related tools, e.g. SumSub, Fireblocks, etc.?
Yeah, so I can break it, basically two questions, right? So first question is we cover all the main market abuse scenarios. One of the interesting, let's say, rules that we have that comes out of the box is to see, front running. So what does front running mean? Some people also call it insider trading because it could be. So let's say a user at the crypto exchange is putting in an order, fairly large order, let's say, in just minutes or seconds before a major market move. So if that would happen and we have Atoma system in place, we can flag it out. So we can flag it out that these transactions met the criteria of being just ahead of a price spike in a certain coin in this case. So that would be one example. But there are of course many more. So we explain most of the things that we have on our website as well, so you can go there and check. With the integration, it sort of depends what is required. So what we use today is we have an API that's defined and it's open. And with this API, we take and we give back data. Depends on how you want to use that data. You can of course put it into some other compliance tool, but we'll have to look at the specific use case to be able to answer it fully, I think.
Perfect. Thank you for that answer, Michael. I have a question here. I think this is for you, Aayush. So the question is, I have seen some papers calculating their own sustainability metrics with back of the envelope estimations. Is that allowed?
Definitely not. So having back of the envelope estimations is not something that is allowed to be present on the white paper. There has to be a defined methodology, and there is a section which asks for the description of what methodology that you are using for your ESG metrics calculation. Obviously, this needs quite a lot of data based on could be your node count for non-proof of works or your hashing algorithm on proof of works. And for layer 2s, it will be a little bit more details that we need for the calculations. But just having like an estimation with back of the envelope calculations is definitely not allowed to have and could raise concerns moving ahead with compliance related issues.
Noted. Okay, we have another question for the Atoma team. Is this software required for the license application or after it has been received?
So it's a good question. We've understood it's different for each country actually. At Safello, took the compliance first approach in actually implementing the full system during the application process and being very transparent with the FSA on that. So it's definitely a must to have it once you start your operations. But then it's sort of a point where you need to be able to describe to the regulator how you're going to meet the requirements. And we've seen that, unfortunately, in different jurisdictions, it's a different recipe because sometimes there's no best practice, which is a challenge for the industry, I think, and something that we are here to address and to help out with. So I think at least to sort of answer it is to at least have in mind which system are you going to use, how's the governance going to work, how are you going to meet the requirements once you're up and running. So meaning you don't probably have to have the system before, but why chance? Because there's always, with IT systems, with data, you need to test it, you need to feel secure, you want to do dry runs, etc. So safe way is to get it before.
Noted. Thank you for that. We have one last question, and this is for Aayush. Could you tell what are the optional metrics? I'm guessing this is related to ESG data.
Yes, right. So MiCA sets a threshold where if your energy consumption is above 500,000 kilowatt hour per year, your supplementary indicators also become mandatory indicators. So if your energy consumption is below 500,000 kilowatt hour, they are supplementary. But supplementary metrics include how much of the energy was from renewable sources, what is the energy intensity of this is how much of energy is consumed per transaction on the network, what is the scope 1 and scope 2 emissions, that is tons of CO2, and the greenhouse gas intensity. So these all become mandatory if the energy use of the network or the token is above 500,000 kilowatt hour. And then there are optional indicators which include the energy breakdown of this annual energy consumption based on what sources this energy is coming from. This will also include metrics like e-waste, of which how much is hazardous e-waste, and metrics like how much of the e-waste is recycled, non-recycled, other natural resources uses, which could be land, water, water use, how much of that water is coming from non-recycled and recycled sources. So these are all the optional indicators, but we at MiCA Crypto Alliance, we don't treat them as optional indicators. So everything that we serve is gonna cover all the mandatory, supplementary, and optional indicators when we serve our clients.
That's great. I think, for Atoma, what are the costs of the services and number of transactions you can handle?
Okay, it's a good question. So we have a very fair, transparent pricing model. So basically, it's on our website. We don't have any hidden costs. I think Oliver put in the link to the website, so it's there under pricing. We have 3 brackets of, let's say, services. So the small package, all of them, by the way, have the same functionality, but it's just the more transactions that we check, the more cost we take on. So the smallest bracket is under 500,000 orders a year, and then it goes upwards. The system is built to handle basically any type of number, I would say, because it's a cloud-based software and it's newly built. But we haven't stress tested it. It would be a luxury problem to do that. We don't have that yet.
Perfect. Thank you for your answer. And I think that was our last question from the Q&A, unless anyone wants to drop one last one before we finish the session. Otherwise, well, thank you everyone for joining us today. Big thank you to Mikael, Oliver, and Aayush for the presentations. If you want to follow up with the Alliance, you can reach out to us via LinkedIn, the email that we put here before. Sorry, I will just change the slide. If you would like to discuss support for your MiCA compliance or learn more about the Alliance, so feel free to reach out to us. And I'll let you, the Atoma team, also do some final remarks before we end the webinar.
Okay, thank you all for listening in. Feel free to contact us. We're happy to discuss and help you on this journey to becoming compliant.
Perfect, lovely. Thank you very much, everyone. Have
Thank you,
a
guys.
nice day and see you at our
Thank
next
you.
webinar. Thank
Bye-bye.
Thank you
you.
so much,
See you.
everyone.
Bye.
Goodbye.